Good morning, everyone. Welcome to Admiral Markets. Welcome to our Forex trading focus room here. We're going to take a look at the charts, of course, in just a second. However, before we do that, we have this PowerPoint that we'll discuss to go through some basics, and then we'll take a look at the price action and what the charts are telling us. First of all, the disclaimer explaining that this material is intended and made for a global audience. Please take into account that the info here may not be suitable for everyone. To get more information and corresponding information on charting, conditions, and other details, take a look at admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Also, of course, the risk disclaimer: trading for exchange and global financial markets is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational purposes only. By continuing watching this webinar, you agree with the risk disclaimer and its content as stated here. Good. So thank you for your attention. So today we're going to take a look at trendline trading. We've been looking at moving average trading last week and yesterday. I still want to keep a bit of focus on those to get a bit more detail of how they can actually match. Trend lines and moving averages can actually be a combination of factors, and I'll explain why in just a second, but our focus will be also on trend lines. And well, anyhow, this is probably a known 5-step plan before you enter, kind of like a checklist or a trading plan. Obviously, after you enter, then, or someone enters, or I enter, then the trade management plan and trading psychology plan become important. But this is the most important aspects before entry. Whether you want to trade it with the trend, against the trend, or in a range, first of all, we need to define the trend so that we know what the market structure is and whether the market environment matches our trading plan and our trading strategy, I should say. Then we're looking for an opportunity, which could be, for instance, a pullback. Then we're looking for filters to see if the trade could be blocked by any chance by, for instance, a major key level that is close by. We are looking for triggers and then deciding the entry method. So today we have some Euro PPI news and Euro GDP news. 2 hours from now we have USD ADP as well, so that's a big one, of course. And tomorrow we have Euro interest rate, and Friday we have NFP. So quite a big week starting out here in the first days of April. Good. So the euro dollar, let's start with that one. We were looking yesterday, and we basically saw throughout the day some small ups and downs, whipsaws, not much of a bigger movement. We basically yesterday could not break Monday's high. We were struggling to break it and couldn't break it. However, the bullish price action that we did have yesterday did break this orange trend line that I have on the chart. And what is that orange trend line? It's basically connecting multiple highs of the previous days, the previous tops here, to indicate that price has pushed through that resistance level. And when price pushes through a resistance level like that, it could indicate the end of this downtrend or this correction and indicate the start of an upside. So definitely this morning things were looking bullish because of that. Price also has actually managed to, on a 50-minute chart, to be above the moving averages, which means now support is below us, and that we are getting into a bullish kind of structure. Okay, is that clear with everyone? Let me see. Let me open the question box here. I don't have that yet. If it's not, let me know. But basically, because prices, the moving averages have crossed. Okay, now we're not trading crossovers, because crossover really hasn't happened as yet. But you can see that price itself has slowly but surely gone back to the moving averages. Moving averages have acted as resistance here, for instance, and here. But price keeps pushing. Price went to The first moving averages stopped at them. Then went to the second, stopped at them. Then went to the third, stopped at them. But keeps pushing up. So this is kind of like a bullish transition. This is how the currency transits from a reversal trade, from a retracement trade to a reversal trade. First it goes back to the short-term moving averages, then to the intermediate, then to the long, and if it then keeps pushing, we're actually starting to go into an uptrend. And one way of knowing that as well is by looking at this hourly trend line. So the hourly trend line and the 50-minute world moving averages are confirming each other. And now I want to kind of like hook back to what I said at the beginning. These two could be supporting each other when you look at them. Because when price starts to break below moving averages, for instance, right? Here, for instance, we have breaks below moving averages, but it doesn't go anywhere. And you can use trend lines to connect these bottoms as an extra reference point that needs to be broken. Because this is, despite the fact that price is below all the moving averages, it's still a support level that could not be broken. If it did, it actually got reversed here. Okay, so when you're looking for is a break of these lines. Sometimes. I'm not saying that this is an ideal break, but just in theory. Or a break of this one. This one didn't have much space, as I said, to the upside. What I did say yesterday, though, remember, is that if we get a move up and a dip, that could be a buying spot for an upside to the intraday high. Sorry, to Monday's high. So maybe you took that trade, maybe you got a couple of pips there, but there were not many, but maybe you were able to catch 20, 25, I guess, at max. That's something we discussed yesterday, right? So I hope this makes intuitively sense. Price is above the moving averages are above each other. So that shouldn't be raising too many questions, but if you do, of course, let me know. Trend lines, usually speaking, are great when price is below and trending. When price is trending, trend lines often indicate where the next break is. Because look at this situation. Long-term moving average, intermediate moving average, short-term moving average, and price is below it. Everything is aligned up. However, price is still struggling to continue. And eventually it does break. Trend lines like this, for instance, are good to indicate when the break, the bigger break, can happen. And that's exactly where the momentum started to come in. So when the moving averages are aligned, that's how you can use trend lines to know, okay, the bigger break is coming. You can also use trend lines, of course, not only as a trigger, basically, because this is a trigger or even an entry, as is when the trend line breaks, but you can also use it as a trend channel. And this orange line, the bigger orange line that's on the chart, is actually a trend channel, because if we look at the hourly chart, what it's incorporating is actually a break of a bigger down move, right? This downside, this downtrend on the hourly chart lasted about 2 weeks. So it is incorporating a lot of price action. It has a lot of price action below it. And when price is breaking above it, that could be the end of that and could be a breakout to the opposite side. If we zoom out to the 4-hour chart to give a bit of a multiple time frame analysis to this, what do we see then? Well, we see that if we put a fib on the swing high, swing low, from top to bottom or bottom to top, the price has gone back to the 50 fib and stopped there. So that could be a bouncing spot. And it's looking like a bouncing spot, or it already was a bouncing spot, in fact, but it's becoming a bouncing spot that is getting followed through. Why? Because it's breaking above this orange line. Right? So I hope that makes sense. I think it's quite straightforward, right, what we're looking at. So personally, I'm taking just a probe test trade here to show you that I think that this is a long-term dip, basically a long-term retracement. No, sorry, this is a retracement within the long-term trend. Excuse me, the other way around. Basically, what I'm doing here is putting a long order above this 4-hour top with a stop loss below the 50 fib and targeting the bigger targets at 142.50. 142.40 is my target. That's a position trade, to be very precise. So for those that like position trades, that's the idea. Basically, the idea is that price is now breaking above the moving averages, is breaking above. We've reached the zero line definitely. So this is looking like a breakout trade to the upside. Once we break resistance, we are having higher lows and higher highs already on this 4-hour chart. So this could be the first base and start of an uptrend to come. So this is a 4-hour swing / position trade idea. If you don't like those ideas, no problem. Let's move on and take a look at the 50-minute world. The 50-minute world has already broken yesterday's high, in fact. It's pushed through it. And we can see everything is starting to be aligned for upside. So a dip back to moving averages could be a good one for more upside on today's euro-dollar. And the target could be, for instance, this H5. An intraday target could be 138.38 here at the H5. From a swing trade position, if you're more interested in the hourly chart idea, then maybe you already took the trade upon the break of the 1-hour fractal, in fact, right here. If not, you could take a fractal break of this top and put the stop loss tighter, though, because this is a 1-hour breakout trade, either here or below to yesterday's low. Probably yesterday's low is a bit more spacious. Or you could wait for the break of this level, which it has already done, and wait for a bit of a pullback still before you take a small swing trade there. So there are a couple of ideas. You can look for an intraday trade somewhere in here for a small upside. You can wait for a breakout trade here with maybe the stop loss for a swing trade, for intra-week trade, or even a swing trade if you take it here and put the stop loss further. So you can see multiple ideas, multiple relationships of entry, stop loss, and time frames. A lot of them are equal valid in that regard. It depends what your personal preference is of and style. So if you have any questions regarding the entry, stop loss, take profit relationship, let me know. In any case, I like if you take a trending trade like this, because it is a trending trade, because it is basically, let me emphasize this one more time, it is basically capitalizing on the fact that this is an upside, this is a retracement, and looking for the continuation here. So there could be a good space to the upside. That's what it's trying to capitalize on. So if you're trading trending trades using using a trail stop loss, allows traders to capitalize on a bigger space. So no matter what the time frame, that's what I would use, except if you're really trading intraday 50-minute world and you want to exit prior, of course, to the close of the day, then a trading stop makes less sense. Daniel, the indicators you see here are as follows. We have golden lines are daily highs and lows. We have the Camarilla pivot point indicator. If you would like to receive that, just let me know and send me an email, and I'll get that to you if you're interested in that. I'll post my email address in the chat. That's a pivot point indicator. We have moving averages. We have, let me write that down for you. Six moving averages. No, 8 even, sorry. You don't need all 8 necessarily, but I like it. There they are. I wrote them down in the chat, okay? Munirai, actually, how you do that, how you create 3 lines of moving averages like this band, is by using the close, low, and high. So whenever you add a moving average, go to indicators, add moving average, use MA method exponential, but apply to close, apply 1 to high, and apply 1 to low. That's how you create a band like that. Now I put Yeah, 144 is also possible. You can use 144 as well. It really doesn't matter 136 or 144. I use 136 because it's the translation of a 34 on a 1 hour chart, apparently. But you know, it would be about the same indeed. Now I put my swing trade, my bigger swing trade, my slash, almost like a position trade, right above the H4 to avoid getting intraday taken in too early. And well, that worked because we are respecting the H4 and getting some retracement as we speak. Is there a lot of momentum as yet? No, not yet. But it is trying to make a bullish breakout. So we'll have to see how this will pan out. But prices are on the hourly are still very mixed up here and very flat. So if you're looking to take a let's say a swing trade here, you might definitely want to be careful because the moving averages are flat on the hourly. And if that is so, we might be in for some volatility within today. So there could be plenty of time to stake out a position that is a bit better, maybe closer to yesterday's low. On a 50-minute chart, we can see maybe an L3, for instance, or the pivot point itself. Those could be bouncing spots when using the 50-minute chart. Now the euro dollar is quite choppy, so I'm not sure how enthusiastic I would be to take direct entry orders at these levels. It could be better to wait for some price action signal confirmation at those particular levels, for instance. The L4 short area is below yesterday's low. And I agree with that because I wouldn't be interested in shorts at the moment until we really make a good downside and then break through. Otherwise, the structure is too bullish, in my opinion, to look for longs. Other things on the chart besides the camera indicator are sometimes fibs, of course, and basically every daily fractals that you can, any daily fractal basically. So magenta are support fractals, brown are resistance fractals. This is for support and resistance purposes. Vigantas 136, I use 136 because it's basically the translation of 34 of the hourly. So basically, if you're looking at the 50-minute chart, the 136 is the 34 EMA band of the hourly chart. But as I said, you can use 144 too. 544 is the translation of the 4-hour on the 50-minute chart. So you see this purple one here? That's actually the 4-hour 34 EMA. The brown one here is actually the 1-hour 34 EMA band. And this is the 15-minute moving averages. So what we have on the chart is 4-hour and 1-hour trend. That's what it translates into. So we don't have to zoom out necessarily to see the 4-hour and 1-hour trending direction. Now, apologies if this seems a bit busy, this chart. We also have the AO at the bottom. But bear with me as we maybe move along. Maybe some people don't like a very overcrowded chart. This is, I agree, a bit crowded, I can imagine. Usually I only look at the Kimmerella or at moving averages. Now we're combining them and looking at trend lines. So definitely I can imagine that you might be getting a headache. Now bear with me. They do provide, I think, additional information. I think they do provide value. So just try to, I don't know exactly how small or big you see it, but try to hang in there because I do think it's worth combining them, despite maybe the visual uneasiness. Now if you look at the 1-hour chart, basically what you're seeing then is not the 4-hour, but this becomes the daily. This is the 4-hour, and these are the 1-hour moving averages. So no matter what time frame, basically, the intermediate band is one time frame higher. the long-term band is 2 time frames higher. If we go to the 4-hour chart, what we're looking at is actually the weekly moving averages, the daily, and the 4-hour moving averages. And if we look at the daily chart, we're actually looking at the monthly moving averages, the weekly moving averages, and the daily. So as you can see, the euro dollar is in an uptrend according to the monthly moving averages, the weekly moving averages, and the daily moving average. Okay? Good. So yesterday was more of a non-event, but we did say wait for the break, wait for a pullback, and we could see the bounce off moving averages to the upside, and that's what happened. We just didn't get much follow through. So much profit there was not. We hardly broke yesterday's high. Monday's high yesterday. So, but you can see how they work. I just want to emphasize how you can use the Camarilla moving averages to decipher that. Let's take a look at the pound dollar. Once again, any questions, by all means, let me know. I see some people leaving, so I guess they're annoyed by maybe the crowdiness of the chart, or they don't maybe understand what they're looking at. Once again, by all means, if you have questions, instead of leaving, just ask me a question and try to get it clarified what you might not understand. That makes I think makes more sense than leaving. Just give it a go at least and try it, because I think it will help with your intraday trading. We'll also, of course, look at intra-week trading. Let's take a look at the pound dollar. Pound dollar has several trend lines. It has this one in play. If it breaks that, we could see a fall, potential fall down to a fib. If we put a fib, for instance, on this move up, we can see potentially space to the downside, right? So in any case, let's go back to the 15. A break of that line, but we also have a daily low, in fact, which we have to be aware of. So we need a break of this daily low, in fact. We could see some downside momentum. We do have moving averages coming in from the 4-hour chart. So if we manage to break through that, basically, that makes some kind of bear flag and continue, we could have shorts on the pound dollar up to the down to the L5 target here. The L4 and L5 limit levels here, basically between the 38.2 fib and the 50. That's probably the sweetest spot for shorts below yesterday's low. The moment, though, we bounce off that trend line. Okay, so we bounced off it right here. And we're basically looking now at a potential resistance spot as we speak. H3 is around the corner. So what we're looking for probably in this case is the pound dollar to fight above the intermediate moving averages, because those are still a resistance right here, plus the H3. We need price really to break above into this H3, H4 zone here, where we can see some wide open space, right? There's space in here, no lines. There's space in here as well, and a bit here. Those are the spaces that we can try to capitalize on when we're looking for a break to the up and down, and then we have that space. Okay. Now, from a 1-hour perspective, that's the intraday perspective. From the 1-hour perspective, we can see that we made already actually a break out of this particular trend line here already earlier. Let's take a look at that line. We broke that line here when we were making that downside. We bounced away from that level and are starting to move up. Let me get rid of the Camarilla on the hourly, so at least that maybe the that would be probably too much information. 1 second. There, that clears up a lot. Okay, so I think Camarilla, let's keep it for the 15 for the moment so that we don't overcrowd the chart here. But this, I think, already helps. You can see we broke above orange here, hooked back to it, and now actually making some good upside in this up move. So this looks like a bullish breakout to me. Price, however, is still early. We just are at the first move up, so we could see some correction here before we make a sustainable, bigger run up from the hourly perspective. What I wouldn't be surprised to see is maybe a move down to these fibs, for instance. From a 4-hour perspective, we can see we broke out of this correction like this, and we bounced off a 61.8 fib. Here, we can see 61.8 fib. That particular fib was also basically, because we're looking at the 4-hour chart, was basically the weekly support kicking in. We had weekly support here, and we had it here. Right? It's always 2 time frames higher. Price rebound, and we can see the momentum is up, and price is now hooking back to potential support. So this is looking bullish. Depends only how far we can make a retracement, or will we still make one more push up before we get a bigger retracement and then up. Something like that remains the question. Whenever we make the hook back, that would be the best position one could have for swing trades and intra-week trades and position trades, to be honest, because there could be space up to 170. Of course, not to say that these brown lines would not act as some smaller stopping points, but those brown lines are actually more meant for intraday trading. As a swing trader, the only resistance I'm really worried about once this does dip and I take a long in here is this one, the top, the bigger top. So let's see, this is the 4-hour perspective. Why is it a bit early? Because basically we have the moving averages aligned, but price just was able to break through it. So that always can carry along some volatility with it. Let me see if I can give you an example of the past. Let's see. Here, for instance, right? We push above it, but I make one more dip down. That's something we have to be aware of. Now, of course, it doesn't always happen. I'm not saying, because here we break above it and just keep going, right? So we want to be flexible for both scenarios. Therefore, in my opinion, an important level is going to be these tops. If these tops break, then we might have a bullish breakout immediately. If they don't break, we might see retracement first, and I would be interested in that level around the 61.8 fib, for instance. Yeah, Daniel, that's probably the best indeed, because Daniel's asking if about the instructions to set up these moving averages. And if you're interested in that, I'll write you my email address, okay? If you need help with putting that on your chart, or write your email address and I'll help you with that. This is my email address, at least. One second, folks, as I just need to copy paste. Bear with me here. Alrighty. So that's going to be a key indication. Euro pound couldn't break yesterday's high. And we have A lot of space to yesterday's low. In fact, we got a bullish-looking structure at the moment, or impulse, but also we see resistance pretty close by. Not too interested in either way. We do have momentum up, but we have resistance kicking in as well. So to me, it looks like it's going to be a tug of war here on the euro pound. I'm not interested in speculating on either side of things on this 50-minute chart at least. From the hourly perspective, it looks also quite mixed up and pretty, I don't know, not interesting. 4-hour too, not too big fan of this euro pound. Let's move on to the AUD USD. Yes, Manuel, that's good observation. It's a good idea, I think. Manuel saying if you use the 30-minute chart, basically you're using these EMAs will represent 2 and 8 hours. Yes, that is correct. I like the idea. There's nothing wrong with it. They are universal concepts, basically, so the 30-minute is just as good. So then in this case we have 2 indeed and 8 hour. We can use that for the AUD USD in this case. So let's take a look at those. AUD USD 30-minute chart. So we have a daily high and a daily low. Right here, we seem to get some correction. Looks like, you know, we can take a look at our, for instance, looking at daily wave. This could be an A, B, C, for instance. There could be a correction. How far will C go? That's the question, basically. We are still at the daily low in the L3 law and not able to break below it. So it looks like a potential bouncing spot to me. We do have a pivot and H3 short close by. So it depends on how much you like this particular bounce idea, basically to bounce off this bottom. If you like the idea, we do have, good space, maybe up to the daily high, yesterday's high. Also, we do have an 8-hour uptrend, 4 hours, 2 hours flat. The 30-minute chart is quite corrective, but that's because of this up and down, so I wouldn't be too worried about that. The hourly is still up, though. Sorry, this is actually 4-hour. The 4-hour trend is up, and the hourly is questionable, right? It's showing resistance. Actually, price is caught between the hourly and the 4-hour here, and the 2-hour is somewhere halfway, flat. So, to me, though, from a discretionary point of view, we can definitely see potential trend line here, for instance. That could indicate a break. Depends how trigger happy you want to be. Maybe in this case, because it's still early in the day, waiting for the break to happen, waiting for a pullback, and then continue has its advantages. Now, trend lines are great. In this case, I don't really see other trend lines that are important besides maybe this one here, indicating the bottom line of that trend line right there. Sorry, 30-minute chart is good. You can see connecting these bottoms. That's how you can use trend lines to your advantage. And whenever this trend line basically breaks, that could indicate the downside potential on the AUD USD. And what is the downside potential when this trend line breaks? We're also breaking yesterday's low. We're breaking the L3. And we could see a fall basically down to the 8-hour moving averages here and down to L5. So that would be the red box there. That would be the space, the potential space here from an intraday perspective to the downside. Because basically what you're doing when you're looking at moving averages is you're looking for price to fill the gaps. When price broke these moving averages, it filled the gap here. These are reversal trades, right? It's closing the gaps. So that could be a trade to the downside. Obviously, if we break to the upside, we could have a trending trade, as I said, to maybe yesterday's high. But how do you want to trade that space? I wouldn't trade it immediately. I would rather wait and be a bit more patient to get a more secure setup. So those are the spaces there on the chart, the green and red circle there. That's the space where we can see on the AUD USD. From a 4-hour perspective, one second, one more thing I wanted to say. Other ways you can use trend lines, for instance, are not even necessarily for entries, but also for exits, right? If anyone took the odd USD long on the hourly chart, maybe last week, and held a position trade or swing trade here, everything was bullishly aligned, well, you did great. And if you use the trend line as a trading stop, then you would have exited right there before the consolidation begins, and you pocketed a good number of pips. So, it depends. I'm talking primarily so far as from an entry point of view, but you can use trend lines not only as entries, you can use them as triggers, you can use them as exits, you can use them as for defining the trend, you can use them as filters not to take a trade. When, for instance, you are maybe thinking of going short, then you wouldn't do that right in front of this trend line, would you? So there are multiple ways of using trend lines. In this scenario, when we look at I'll use the 4-hour, we can even see a trend channel like this. Right, something like that. Incorporates price nicely and shows a neat channel to the upside. It has multiple hits on the bottom, which is the most important in an uptrend channel. It has multiple hits on the tops. It has a good angle. A good angle is something between 30 and 45 degrees, roughly speaking. It sees price respecting both sides. It also has kind of like halfway line that is respected as well. Something like that. Okay? That halfway line is often respected in a channel like this. If a channel is too steep, it's not a trend channel. If it's too shallow, it's not a trend channel. It's a consolidation or a bear flag. Also, not all price needs to be in that channel. It's okay if some price is outside of it, especially on the top, above it in the uptrend or below it in the downtrend. Those are kind of like overthrows and underthrows. Even the bottom in the uptrend can have a certain price underneath it, especially if it's just a wick or a small part of the candle. Even bigger parts of price action could be below it, as long as the channel becomes more harmonious and more balanced in its angle and number of hits. All right, folks. Well, the odd USD certainly had a good momentum here, so I wouldn't be surprised that any dip down, potentially any break below here, will find support for one more upside. Looking into this 4-hour chart. Obviously, if we don't make this dip down but continue immediately, then, as I said, keep an eye on this intraday levels for upside to retest yesterday's high. From a daily perspective, though, we can see that there could be space as we are continuing into this uptrend to retest maybe resistances in here, like these lines and these moving averages and these tops. And those, of course, could be resistance spot again for downside. Trends will last until we bump into bigger support and resistances. Those could be it. In the meantime, though, as long as those resistances are pretty far away still, any dips or breakouts to the upside would be interesting on these odd USD. Yesterday's intraday trading regarding the odd USD didn't find too interesting, didn't trade anything here. In fact, we had some upside during intraday trading, but I didn't find it too interesting. What I did find interesting was the Kiwi. So maybe you took along with me. I was looking at this long right here, sorry, this fib, and not soon after, or soon after we closed the trading room, actually, to hit the 786 fib right here, went right to target, minus 618. So that was good upside. Maybe you caught some pips with me on that one. However, yeah, quite surprising. We got a very big downside. We had a very big wick here. That bearish price action signal, we saw continuation throughout the remainder of the day and earlier this morning. We've reached already the L5. We've clearly broken yesterday's low, but we already reached the target. We already reached L5 today, which means that How much space is there for the QE to the downside? Difficult to say. I mean, L5 is already a pretty substantial level. We could maybe have the S3 a bit lower, but much space there wouldn't be. So today could be more of a range day for the remainder of the day. Not too interested in trading ranges, especially the moving averages are like this. I don't see anything that interesting at the moment that could occur. Of course, maybe whatever price action will happen in the next couple of hours could maybe change the scenario. I'm not personally at the moment too interested in it. Maybe if it goes back to these resistances here, to yesterday's low, as uses as a resistance, I don't know. It's difficult to speculate and think about where I could see something interesting. I don't see much space to the downside, so I'm not that interested in downside at the moment. So that's my reasoning. Let's take a look at the 4-hour. The 4-hour basically retracing as we speak. And if I look at this, we can still see a very good bullish trend. In fact, this weekly is up, this daily is up, price is now making a retracement. Anytime we get this again, right in here, it will be another bullish breakout. So looking at this 4-hour chart, it looks like we're going to get some consolidation throughout the next day, or the remaining day, I think. Looks like we'll get consolidation, something like, for instance, what we had here. I wouldn't be surprised to see that. The Kiwi, therefore, getting less interesting, in my opinion. All right. Let's move on to the dollar CAD. Dollar CAD yesterday had a small upside, then it reached Monday's high, then made downside, then it reached yesterday's low, Monday's low, and it's really ranging here. It's not breaking any of these levels. Putting any trend lines here doesn't really matter. It's just the tops and the bottoms that are acting as support or resistance. The moving averages don't matter too much either at the moment. It just doesn't look too interesting to me. If you're a range trader, there could be an interesting level right here maybe to look for long, again, as a bouncing spot. Maybe that's about it that I can think of, in fact. From a 4-hourly perspective, it's just taking a lot of time. We had a break of the triangle, and you can use trend lines, of course, for that those triangles like this, for instance, to indicate what the triangle is. And we are basically getting a very deep retracement and just consolidation. I don't know. It doesn't really look appealing to me at the moment. However, if we look at the 4-hour tops and bottoms, a break of that could make it more interesting. A break of these bottoms or a break of these tops could mean either finally the continuation to the upside, or we just continue with the bigger retracement to the downside, and we can see this downside. I don't know. It doesn't look too interesting at the moment. That's just very simple. Dollar Swissy. Also, it is quite wrapped up in consolidation. How do I know that? Well, the moving averages are flat here. And here they're flat as well. They're very flat, in fact. And there's no angle at all. So this is not going to be much of a trending mode. It's probably going to be bouncing up and down, I would say, today. I don't know. It doesn't really look like it's in a really great stage for a breakout trade. Even if it does make a breakout, it's not something that I would like to trade, to be honest. So let's move on. Maybe, I don't know, let me check the daily chart. It really doesn't, no matter what time frame I look at, I don't know. It doesn't seem to be that interesting to me. Maybe if we break above yesterday's high, there could be some space here and then here. Those blue boxes on the 4-hour perspective. Or if we break below yesterday's low, maybe then some downside here. So maybe if we break the higher low of yesterday, but otherwise not looking too interesting. Dollar yen. Dollar yen definitely continuing with his breakout to the upside. There is a bit of a divergence in the meantime between these tops. Therefore, one would expect a bit of a retracement to the blue band first here before we get the bounce. That's what I would be waiting for. However, at the same time, if we look at the 5-minute chart, we see kind of like a bull flag happening as we speak. So maybe we won't get that bigger retracement. But because of the, I don't know, it looks to me, let's take a look at the 4-hour. We are above this resistance, so we can take this line away. We broke above it already. Definitely a bullish breakout. The question is how far can it go before we get some retracement. The hourly is very impulsive. It's really moving fast. Why? Because the gap between these two moving averages remains constant. And when it does that, that means there's a lot of impulse. There's a lot of space between these moving averages as well. So let's take a look. If we zoom into the 50-minute chart, we can see the potential of a breakout trade as we speak. So that could be interesting. We've got an H4 at 104, and then after that H5 at 142, 104.28. That could be a breakout trade right here above, right here actually, or just a few pips above this fractal, for instance, for the upside break as we're looking at this dollar yen. I am somehow not a big fan of it. And that main reason is just because we had basically double divergence as we speak. We have it when looking at the 50-minute chart at least. If we look at this top, and this top, all of the oscillators have lower lows, but price has higher highs. With double divergence, I really think that the chances of price eventually getting to the L3 and back to the blue band are increasing. And if anything, that would be interesting for me, but not this breakout. Or actually, it looks like triple divergence. 1, 2, 3. Lower, lower, lower. Higher, higher, higher. So no, not trusting. I mean, knowing the dollar yen, it probably, in some cases, when it really starts to trend big time, it can actually keep pushing and pushing. However, I wouldn't say that, I wouldn't qualify the dollar yen, although it made a very good up move here, as that trending as yet. Because we had a very big consolidation like that. I'm still a bit cautious because of that. We are definitely breaking out. The only thing I'm saying is that with triple divergence on the 50-minute chart is something that I wouldn't want to ignore as yet, even though it could break out and make a few pips to the upside here. All these yens, in fact, are having a bit the same. However, pound yen was maybe the exception because it did get back to our blue band. Remember yesterday we were saying this was looking like a rising wedge like this, so move back to the blue band as possible. And you know, you could have used a trend line like that to indicate when the rising wedge is over. I mean, has started, sorry, and is over as well, because as soon as price breaks above this resistance, we know that we're back in the uptrend. So that's how you can use trend lines at the moment. I don't see many good examples of how to use it. We have a support line that we can use like this. For instance, it's a very steep line, but that's possible. Otherwise, here too, the euro yen, pound yen, they kind of have the same structure. We have a bullish trend pushing, but with divergence. And the pushes are getting weaker and more corrective. Alrighty. If there's some specific Camarilla like currency pair you would like to see, let me know. Otherwise, I'll just go to a template that doesn't have Camarilla so that it becomes a bit maybe less crowded, the charts, okay? So let's take a look at a currency pair that might have some good trend lines and a good swing trade potential. Once again, if you're looking at specific Camarilla levels or if you have any questions regarding intraday potentials, let me know. Now I'm going to take a look more at hourly charts so that we don't have to, we will not look at the Camarilla in that case. Let's see, this is the odd use the hourly. We can see that we've made a double dip below the 1 hour band here. This is a 1 hour chart. So what you see here is the 1 hour band. What you see here is the 4 hour band. And what you see here is the daily band. And this looks definitely starting to look more like a correction, a double dip correction here for more upside. So I would say any break that we go above the 1 hour band and you hook back could be interesting first of all, or any break again above that fractal could be interesting as well. Other than that, let's take a look at the 4 hour. 4 hour basically going back to the band as we see here. That's of course something that we can see on the hourly too, right? Looking at the blue window. That's something interesting. I do think that we could see maybe some smaller swing trade here, intra-week trade, in this zone right here. That could be interesting on the Aussie. So that's something that might be worth keeping an eye on. The pound dollar could be too, because the pound dollar is actually dipped down below the short-term 1 hour band and is now trying to break above it. So here too, if you look from a swing trade position, a break above and then below again for upside, something like that could happen as well in this hourly. Here that's less, the euro dollar has that less prevalent in fact. It's less visible. The Kiwi is also breaking below the 4 hour. Actually, there's a difference. The Kiwi, contrary to the odd USD, you see the odd USD is staying above the 4 hour blue band. The New Zealand isn't. The New Zealand is breaking below it. So there's a bit more bearish pressure here. And we see the hourly already quite bearishly turned like this. So I would be a bit more cautious on the New Zealand. Dollar CAD seems to be a mixture too. Ah, yeah, that triangle. Yeah, that's true, Wei, indeed. If we look at connecting trend lines, for instance, we we had it like this yesterday. It did get a break of that line, but basically just bumped into resistance again and stopped. So we can still use the same line, maybe just adjust it a bit. It's the same resistance, in fact. Now more support levels, though. Looks more symmetrical, indeed. So this is how we can use trend lines together with moving averages, because the moving averages, they're kind of like bands, right? And price can still break above it and below it. By using trend lines, we get a more precise precision point to work with. Moving averages are great because they always provide information, but sometimes you need a trend line to be a bit more precise. Look, this is a trend line that connects three tops. Moving averages would not be able to do that. So that's how a trend line could be an extra value. This trend line, for instance, connects bottoms. But in fact, the moving average, the blue band, already acts as support. So that particular trend line, although we can have it on the chart, doesn't really give us much additional value in a way. These trend lines do, because these are points that are out, away, above or below the moving averages. And then they do have a value. For instance here, price is sneaking above the moving averages. Well, in that case, we can put a trend line above it, right? That will give additional benefit, additional information for this breakout. I had some other questions, I think, or comments. Let's see, the MT version type, I don't know, actually. 625. Oh, I just downloaded it recently, in fact. Yeah, so I have the newest. So 625. Let's see. Other question from Manuel. Well, basically, we have free webinars on Thursday. Toronto has free webinars on Wednesday. So let me get you here this info. But I can also send you my email address. Or why don't you send me your email address, Manuel? And I'll get back to you on that, okay? But in general, though, we do have a video archive with explanation of many things. You have to take a look at what you will find interesting. We have live webinars, of course, upcoming webinars as well. One of them is on Thursday, where we take a look at Pro Learning Lab. Okay, that's where we take a review of various topics, but that's together with Nenad, and then Nenad has his own webinars on Monday and Wednesday. You can see here all these yens are breaking out, in fact. All these yens have price above and are moving pretty steeply. But none of them has made a retrace as yet. And they're getting a bit overextended on the 50-minute chart. That's a bit what I'm worried about. So that's why I don't find it too interesting at the moment. All of them have the same structure. Let's see if the pound odd could give us something of a new vision here, something different. Let's take a look at the hourly. Hourly is being squeezed, actually, on the pound odd. A trend line like that could be maybe of some value for us. We also have a trend line at the tops. Something like this. It looks like a triangle, contracting triangle. It's going to break out one direction or another. We see some space between above the trend line and the next set of moving averages, or we see, of course, space below it if we were to break out to the downside. That's how you can basically visualize space. Now, how far could this downside go? Then it's always good to look at fibs or the next support layer of support and resistances. On the daily chart, the next support level here is at 175.50. Plus we have these support levels. Well, that's where price stopped. So once we break below this 4-hour triangle, we could have space down to the next support level, which is here. So that would be the space to the downside on the 4-hour. On the hourly, that would be still the same space to the downside, but this would be the space to the upside. Euro odd 2 is making a retracement. Same story basically as the pound odd. Now, of course, mind you that this is swing trading ideas. There could be intraday levels like Kimberella points where price will make an up, then a down, then an up, then a down, then an up, then a down, and then go up, right? So the swing trade could be correct, but it's going to have ups and downs, and it depends on how you like to trade it. If you like to take a swing trade, then that's a reversal potential there on this hourly. For an intraday trader, they might be a bit more waiting for the up, waiting for a dip down to trade it up to halfway, then take another dip down and trade it up to the top. They could have multiple trades within this section, right? Now, from a 4-hour perspective, we do have a bit of divergence maybe between these bottoms and these bottoms here. So we could expect price to go back to the intermediate moving average, which is here. So that supports the idea of a potential break above the triangle. And we'll bump into resistances here. See if the euro odd is the same. Yeah, it has the same. We could see some divergence between these bottoms. So here too, a retracement back to those moving averages is in the cards as well. So you can really use these items to piece out a understanding of what's going on. Pound New Zealand is making that retracement as we speak. It too had divergence between these three bottoms, in fact. It already broke above the short-term moving averages and is heading towards the intermediate one. So all we're seeing now are retracement and reversal trades. Why? Because price is going back to the moving averages. If price is moving away from the moving averages, specifically the short-term band, then we're in a trending mode. Specifically, of course, if it's also below this one. Now we have that on the pound yen. No, yeah, both of them are actually pound yen and dollar yen that we're looking at. Yes, price is moving away from them, but we just recently had the switch here, the crossover, and we're bound to make some correction if you look at the 15. This could push through, though. I'm not saying, because the pound yen could still maybe make another 50 pips before it really that divergence kicks in. It's just too risky in my opinion. It's tempting because I like to trade with the trends, but triple divergence is just a bit too much, too big of a filter for me. So let's see if there's anything trending at the moment. First of all, I'm going to take a look at Euro Swissy. Bob was asking for Euro Swissy. Euro Swissy has a trend line, a good trend line here like this, potentially. That could be interesting. Although I don't like, there's quite a lot of price action below it, but anyhow, it's possible. The thing is, though, that the moving averages are totally flat. That doesn't look too interesting. 1 hour is totally flat. I wouldn't be too interested in this pair because it's all flat. Everything is flat. The 4-hour, hourly, and daily are sitting on each other. So that's not appealing to me. No, doesn't look too interesting. I mean, we could see maybe the potential for a bounce, I don't know. It doesn't really inspire me too much. Maybe a break of these tops. We could see some upside continuation. How far? Maybe to retest this top, for instance. So there could be some space here, but other than that, or some space if we break this trend line. Doesn't look too interesting to me, though. Not from this perspective. Let's see if we can find something that is trending. Maybe the CAD Swissy to the upside, in fact, because the CAD Swissy had a strong impulse here, and it looks like we have a potential that this is a correction for one more upside up to the purple band. The purple band is about 81.70, 82. And you can see that this is starting to look like a correction. So that could be maybe interesting. I don't know. It's early though. Everything looks flat. Could be interesting. This upside on the CAD system. Let's see if there's anything better. Your CAD looks down. CAD Swissy looks up, which means we are looking at two CAD strengths here. Let's take a look at pound CAD. Bit of a mixture, but still maybe a bit more bearish. Could be an interesting breakout trade. It's almost like a retracement for more upside after correction here. Went to the 38.2 fib. And if you look at that target, the minus 272 target lines up with the moving averages. It's not an ideal trade, but looking at the current market conditions, I have to admit I don't really see a lot of trends taking place. Very simply put. Everything seems to be a bit of retracement mode. We're looking at the hourly and 4 hours. So, or if not retracement mode, then just freshly broken out with triple divergence. So, no, it doesn't really seem something interesting at the moment. But maybe this gap in here between the bands could be interesting. Let's put a Kimberley indicator to see what the shorter time frames are saying. Here we have it. Let's see. We have H3 short right here. So we can see if, for instance, we can see an H4 about 0827. If you like the idea of a swing trade, what you can do is wait for maybe another bull flag, excuse me. Let the moving averages here crawl up like this to get some angle because they're still totally flat on the 15. So let it get an angle. Most likely we'll make some upside, make a retracement, wait for that retracement, and then take that swing trade with that swing trade idea in mind. So let's go back to our original template. This does seem like an okay stop loss here using that bottom. And wherever this stops, we can even fib it. Look for maybe a 50 or 61.8 with a stop loss below here is something that I could be interested in. And targeting not these targets, but targeting basically targeting this one right in here. That could be interesting. So this is basically how we could combine multiple time frame analysis and multiple tools to come up with a plan. We can come up with a plan for basically using these tools at any point in time. The question is, though, what are you looking for? If you want a bit of a trending mode, then you got to be a bit more patient. And if you don't mind taking a bit of a reversal trade on the 4-hour on the hourly, then there's sometimes more opportunities. This is a bit of a reversal trade from let's see what time frame, from a daily perspective. However, the 4-hour is already aligned, in fact. So, wait, no, sorry, excuse me. The 4-hour isn't totally aligned as yet, but we can see this space maybe till here. It is, though, a last reversal trade or retracement trade. Alrighty. But you can use that, basically you can use that Camarilla. If you're interested in the swing trade, you can still use the Camarilla to pinpoint what could be a good entry spot during the day, at what level for that swing trade. And you can then, when looking and analyzing at local levels, what I mean with locals, intraday levels, you can then analyze where the best spot could be to enter a swing trade or inter-week trade. Most of the time frames I look at are 1 hour and 4 hour, to be honest. What I want to see is the harmony between those. Now I know that the 1 hour already is showing actually the 4 hour and day chart. However, I sometimes still look at the 4 hour just to see more price action and more history. However, if you look at the hourly, you already see the 4 hour band, in fact, which is this one, right? So what the Euro New Zealand did yesterday, it made yesterday an upside and moved back to the short term, used it as resistance, corrective, moved up to the intermediate, used it as resistance, now is seemingly moving up and almost there at the long term. So this had 3 kind of like reversal trade potentials. And prior to that, it had with the trend trades, right? This is how you can understand market structure by using these methods. On a 50-minute chart, the trades that are looking like reversals here are looking different on the 15. On the 15, we see, yes, reversal, 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 but this trade is already half with the trend, in fact. So this is how you can piece it all together. Yesterday, if we looked at the intraday trading on the Euro New Zealand, basically here we had some breakout potential to the upside, but wasn't too much space. Somehow I thought it was more space, actually, less than I remembered. But anyhow, that's besides the point, I guess. So to sum it all up, I think that the euro and pound dollar could be interesting for swing trades soon. Maybe the CAD Swiss C could be interesting as well as a reversal trade. Other than that, the dollar CAD has a triangle indeed. So those are kind of like maybe more longer term positions. For the yens, I'm looking for a bit of retracement before looking for longs myself. The euro odd, pound odd look like they're at a decision spot. Will we make a bigger retracement, or will we still continue for one more breakout? That's kind of like the bigger picture. For intraday trades, let's go back to our Camarilla. Intraday trades, AUD seems potentially interesting. That one I remember at the top of my heart. AUD. We need more confirmation though. Let's see. Pound dollar could be interesting as well for an intraday long. Euro dollar maybe at the pivot or L3 though, as I said. If we get a bounce there, what else did we look at? I think that was about it. I think the majors basically today seem the most interesting to me. Crosses don't seem too interesting at the moment. Now that could change throughout the day, but that's what seems most interesting at the moment. Yeah, that's, I guess, rounds it up for today. We'll be back later today, or not myself, but Nena will be back later today. On Wednesday, he's going to take a look at price action trading part 4, in fact. If you have any questions in the meantime, of course, let me know. You can do that anytime, by the way. You can ask any questions throughout the webinar. It doesn't have to be at the end. Tomorrow, we'll be back with the live trading webinars, same time, same place, of course. We have as well a educational webinar tomorrow evening. Then we're going to be taking a look at Forex strategies part 2 as a sequence. Although if you missed part 1, don't hesitate on joining, because we're going to show new setups, so it's not connected to each other. You don't need part 1 to see part 2. It's independent. So tonight, tomorrow morning, and tomorrow night, those are the remaining webinars still, as always. You can also look at the 5-minute chart for the pound, by the way. Looks like any dip back. Actually, this could have been maybe already a good dip. Anyhow, then look at the 5-minute chart. You see, sometimes the 5-minute chart shows you earlier dips than the 15. That's just because the 5-minute chart, the moving averages are going to be aligned already earlier. And I wouldn't necessarily look at these on a 5-minute chart. I could even take them off, to be honest, because I think that really doesn't provide too much value. That would cluster the chart too much. For 5-minute chart, I think these are enough. We weren't looking at the 5, but we talked about this more often, about the dips back to moving averages when you get a spike, and that could have been one of them, in fact, in retrospect. Anyhow, something like this, again, will probably happen not all too long from now, and the same thing could happen. So you want to take a look at the potential maybe on the pound dollar throughout the day when it does this. Of course, there's always a risk that this one might fill. You never know. But I do think that there's sufficient space on this intraday time frame to the upside. Maybe even a break of this one could have been a good entry. As I said, any dip back to this level seems like a good potential for continuation. Okay, looks like we're getting a breakout of this top as well, the H3. So that's what I would be looking for. Wouldn't want to go long here because it's already pretty halfway-ish. So a dip eventually, although it could still move up a few pips, I'm not saying, would make more sense. That's something we never know. When we're planning a retracement, we really never know if we get it. But I'd rather plan for the retracement here, especially in intraday, because the intraday time frames are already quite squeezed and not much space. There is really not much space, if you especially if you want to exit by the end of the day. You want to definitely try to get an entry that has sufficient pips still left in front of it. Okay, so that's what you definitely want to avoid, is chasing the market on intraday. I mean, you could still maybe survive in not optimal entry on, let's say, a swing trade, just because you have a wider stop loss and you're aiming for a target that's multiple days away from now, which means you could let the currency basically run in your favor. You can't let the currency run on intraday because you're closing out at the same day. So the space, the target is limited. That's one of the advantages, I think, from intra-week trading, because you can capitalize on a longer run. You can't do that with intraday. That's why you need to be a bit more precise with entries as well. That balance is a bit different. Well, I don't see any questions, so I guess with that said, we'll now wrap it up. By all means, looking forward to see you tomorrow, and wish you all a great day, great trading. Cheers, everyone.